Thank you for joining us for this week's episode of the RFI Global Digital Banker podcast. With me today is Steve Weston, who is the co-founder and CEO of Volt Bank. And Volt Bank is a digital bank that was the first Australian-owned startup business to receive a banking license since 1981. So to start with, Steve, could you please introduce yourself to our listeners and tell us about Volt and your experience in the financial services industry?
Absolutely. And firstly, thank you very much for the invitation. I was looking forward to the session. So Volt, firstly, we are one of two independently owned, fully licensed banks in Australia that were established in the last few years, the other being Judo Bank, which focuses on SME lending, and the team there have done a great job. Volt has a different business model. Our key asset will be mortgage lending as opposed to SME lending and Judo. But our primary point of differentiation to the banking market is that we offer banking as a service capability. So we allow businesses to offer bank accounts and payment solutions to their customers. We have built a full range of deposit products. We've got half a dozen partners. They're at various stages of scaling up. We kicked our mortgage business off a few months ago, and it's going gangbusters. So this year, 2022, is all about scaling up. So it's going to be very fun time for the team who have built something that largely hasn't been seen by the public. So 2022 is an exciting year. My background was in banking for many years here in Australia, and then overseas at Barclays. And I always had this belief that banking could be done in a better way, and it needed to be done in a better way. And rather than trying to do it from within a large organisation, I said, mate, if you think you know what needs to be done, why don't you stop talking about it and go and do it? And that's what we've done at Volt. And so 2022 will be the year that the rest of the world, or at least in Australia, gets to see it.
Something I love about speaking to people who are in this sort of fintech startup industry is that idea of, well, we're speaking about doing it, so why don't we just do it? And I think it's one of the key lessons that I've been seeing when talking to people who have the ability to almost start from scratch, or they're not held back by legacy systems, or they can really start with technology or start with, what needs to be done, the needs they're addressing, and actually start with that, or thinking about, customer first approaches. And are there any other lessons that you have carried into Volt Bank from that vast experience in the financial services industry?
Absolutely. And you just reminded me of that moment where I'd been thinking about doing something in the banking space. But as you said, there hadn't been a startup getting a banking license in Australia, since the early 1980s. And you needed really $100 million worth of capital. And no one's going to give you that sort of money just on spec. But the Australian government in 2017 copied what had happened in the UK. And they said, look, we want to bring more competition into the Australian banking market. And they made some changes that would make it possible for a startup to get a banking license. And I was watching the Australian budget being announced live on TV, and it was our current Prime Minister, Scott Morrison, who was the Treasurer at the time. And he had a 3-minute burst, I guess. And it was like, oh, I know what comes next. It's a digital bank. But who's going to do it? And I feel a bit weird now. It's like a third person. And then in that moment, I said, that's you. And I didn't sleep that night mapping out a business plan, started phoning people 6 a.m. the next day, and kind of the rest is history. But going back to my experiences, and I did start as a 15-year-old as a teller and worked my way up. So always had a real affinity with customers and helping people with problems. And the more senior roles you got to, you went from being able to help one individual person, maybe with a complaint or needing a mortgage, or a business, helping a business grow, to being able to help many more. What we're doing with Volt will be able to I think, change the industry for the better. But a couple of key learnings: the power of people, and that's all stakeholders, customers, staff, doing the right thing, and the like is really important for what we've done. Leveraging and really harnessing what data and digital can do, both to run an efficient, low-cost business, but also to help customers live better financial lives, and that's easier said than done. But my last banking role prior to starting Volt was at Barclays Bank in the UK, where I was on the senior leadership team. And we had all the sorts of issues that Australian banks have seen through the Royal Commission and probably some others. And I've become quite a student about what had gone wrong. How was it that, good people that you work with, over decades had got banking into a situation where there'd been this loss of trust. And not that that's the topic today, but certainly the foundations of Volt are around people and around doing the right thing, leveraging digital capability. And, there are pros and cons about being a startup. One of the pros of having a clean sheet of paper and being able to build a bank without any constraints around legacy technology, legacy thinking, that genuinely will help customers live a better financial life. And we're not a charity that shareholders will do well out of as well.
Yeah, I think there's a lot to be said about building trust and thinking about what needs to be done to actually build that trust. And something that RFI Data did see is really key when building customer trust. So we looked a lot into what's important to customers post Royal Commission, thinking about that trust that was lost with some of the major institutions. And I mean, I saw on your website there's some mentions about transparency and clear customer language. And I think there's something really, really valuable in banking products being offered in a way that's really clear, really easy to understand. And especially when thinking about, drawing in customers feeling confident in the products they have, or, even thinking from an acquisition perspective about drawing customers in based on making it a friendly product, making it really clear, minimizing jargon. Is that something that's really consciously been embedded in decision making, thinking about customers?
I couldn't have said it better. We're super conscious about that. And one thing that still irritates me to some degree about the banking industry, and remember, I did come from the banking industry and I want a lot, and I love it, but I do want to be part of making it better. We will hear banks talk about the Royal Commission and apologise to customers for the sins of the past and say, look, we're fixing them up, we're doing remediation programs, but we now truly are going to put our loyal customers at the heart of what we do. And the bank staff en masse are cheering for that because that's really what they wanted to do, but the system was broken. But we've got a long way to go in it. Even if I looked at, just let me pick one product, a savings account. In Australia, if you go to the major banks, you might get 0.2, 0.3% for a few months, or you've got to deposit a certain amount each month to get a good rate. But the vast majority of people then fall just to the ongoing rate, and it could be 0.01, 0.05 or 0.1. Now, that rate is lower than what customers should be getting. But as a banking industry, we know that, but we still put up with it. And if you go and ask banks, hey, look, when you talk about putting your loyal customers at the heart of what you do, why is it they get a better rate, the new customers get a better rate than the loyal customers? And then the loyal customers have to either change banks every few months, or they have to, remember to deposit a certain amount and those sorts of things. And the banks will say something like this. Hey, look, Steve, Anna, we're not breaking any rules, any regulations. The terms and conditions clearly say that this is what will happen. By the way, almost all banks do this. So you lull yourself into this false sense of security that it is okay. If you're putting the customer's interest at the heart of what you do, you know that offering 0.01 or 0.05 is not flash for a savings account, and the rate should be higher. So in Volt's case, we may not be the fifth biggest lender or bank in Australia anytime soon, but we've come out with a savings account and it's got a simple rate. It's a good rate. It's better than the majors. But what you see is what you get. And the feedback from our customers to date, particularly those who are over the age of 50, funnily enough, is hallelujah. Finally, what I see is what I get without all the mucking around. So there are good examples of banks wanting to do the right thing, but there are still more to be done, but there's no incentive for them to change. So someone like Volt coming along and saying, look, we can do it differently, and then throwing out the challenge to the other, I think, is what you'll see Volt do in mortgage lending as well. It's
a good point around the fact that you can be really transparent with your product, but your product can be not great from a customer perspective. So you can really transparently say our rate is 0.05 after the first 4 months. And, you know, you've ticked the transparency box, but it doesn't make the product actually suit what customers need, which is the ability to accumulate savings, particularly in an environment where, you know, it is quite a low rate environment. So customers are looking for what they can get. And the customers who aren't comfortable investing outside of savings account, you know, who aren't really high risk or looking to try a new form of investment, they just want a really good rate that's really straightforward and doesn't run out in a way that,
Correct.
oh no, I've noticed that my rate is now off the bonus rate. What do I do? And very few customers are the kind of rate chasing customers that every 4 months they find a new bank, because I mean, how many banks? How long do you do that for? Exactly.
You give up.
Yeah.
And we'll come along and say, you know, here is an offering that is designed to be customer friendly. It's simple, it's transparent. And then with open banking, you know, the more people that we can get to aggregate their banking data on the Volt app, will help point out, do you know you're on 0.01 or 0.05 and you could be on 0.9 with Volt. It's our current rate. And this is how easy it is to open an account. So little steps, but certainly Volt will look to play a leadership role in changing banking in Australia for the better.
And you mentioned open banking, which I think is a good transition to what you mentioned earlier, which was banking as a service. So could you explain to our listeners what banking as a service is, and, you know, kind of give us a bit of a definition?
Absolutely. And I should say up front, quite often, Annie, you'll hear terms banking as a service or embedded finance or integrated finance, and people say, are they different? Are they the same? They are the same. They are just coming from the point of view of a business or a bank. So if I'm a business, I want to do more business with my customers. I want to tailor my offerings. I want to remove payment friction. So I will offer bank accounts and payment solutions in my customer journey. And the business will refer to that as embedded finance or integrated finance. As a bank at Volt, we offer the banking infrastructure, bank accounts, payment services and the like to businesses to offer to their customers. Volt will refer to that as banking as a service. So we're talking about one end of the same thing. When we were establishing Volt a few years ago, we looked at what customers would want to live better financial life, but we also looked at what would the future banking business model look like and where would customers be acquired from. And almost all industries would move down a platform route with ecosystems. If you had customers, you would want to do more with them than just offer them the business that you had. And quite often that was going to involve access to banking products and payments. There could be, with customer consent, data sharing. So as a business, you could tailor your offering to your customers. We also knew that to do that, businesses would effectively need to become banks, and almost all of them wouldn't want to do that. It's too difficult to do. So their option is to go and partner with banks. We also knew that for banks to offer banking as a service capability, it's incredibly hard to build from a technology perspective and then to integrate with your legacy tech. And also there is a big mind shift required, because as a traditional bank, you own the customer relationship and you want to promote and cross-sell other products when the customer needs them. With banking as a service, the customer belongs to the business. The business says, it is this point on my customer's journey that I want to offer a payment or a bank account and the like. And in Volt's case, we are, work to the instruction of the business about where that happens. So effectively, the commercial motivation for Volt and the customer motivation is customers in the future will more often than they have ever in the past do their banking through their trusted partner. It will be a less contested area of banking to acquire customers from Volt. So we'll be able to acquire customers at a lower cost of acquisition than if we had TV advertising or social media. And we'll have that in small degrees. But the return on investment of spending, a few years, quite a lot of money in building this banking as a service platform is already starting to pay dividends.
Do you have some use case examples of banking as a service sort of benefiting customers in a particular way?
Yeah, we do. If I use just a couple and maybe bounce through a couple of others. So the first would be with AFG, the big mortgage broker. They originate 1 in 10 mortgages in Australia. We in some way have helped them become a bank without being a bank. They're not a bank, but they have an AFG white label app where their customers can see all their bank accounts, credit card, loans. They can budget. They can more easily apply for a loan through their AFG broker. And the like. We built an AFG white label digital mortgage, which, AFGs are saying the average time for a customer to get an unconditional mortgage approval is 21 days at the moment. We are not far off instant. So it's not, a couple of days better, it's transformationally better. So that for AFG improves their customer experience. They will in time have AFG branded deposit accounts and the like. So they kind of become a bank and their customers are theirs, and you're not worried about if you send them to Bank A, the Bank A, gets them to open a credit card and a transaction account, and then their Bank A's customer. So that's a really, really big deal for AFG. One of the large digital currency exchanges, BTC Markets, they have 350,000 traders. We have helped the money movement when customers are buying, selling digital currency to be much easier. If the customer is happy to open a Vault bank account, the money transfer is instant. There's back channeling of info to let BTC know that Anna has just deposited $2,000 to cover that Bitcoin order and the like. And that is a big, big deal, a global first in that way. And also always a concern for digital currency exchanges about either being debanked or when their customer, when Anna actually wants to transfer money to settle a trade, that it's blocked and she gets a phone call from the bank, all of those sorts of things. We also work with the global leader in banking as a service, Rails Bank, or Rails Pay as we call them in Australia, and a couple of use cases there. One is Parpera, who really were the first firm in Australia to leverage banking as a service. And they provide a whole range of products and services to SMEs, and they're one of Vault's use cases. And also, you may be familiar with Doe, who are listed on the stock exchange and have business activities here in Australia and in the US. They've built great budgeting capability and digital currency trading capability, but they're not a bank. So the bank account behind the scenes will be offered by Vault Bank through Rails Pay. And the reason Doe chose to work with Rails Pay, they want to expand internationally. And so they can have one integration into Rails Pay, and then they can open in Singapore and the US and UK and the like. So they're just some of the use cases. But I have to say, the demand from businesses is enormous. The breadth of use cases is equally as broad. And we certainly have got more than 100 businesses. It's well over 100 now between ourselves and Rails Pay of people who want to offer embedded finance to their customers.
Seems like there's a real opportunity for a lot of growth. And you mentioned global expansion. You mentioned, even acquisition or retention opportunities where traditionally a client may lose a customer because of not offering that product, like in the broker scenario. However, through this solution, you can actually integrate it all into one, which seems like something that would help both the customer quite clearly, but also the organization in, meeting their goals, expanding, retaining customers, offering customers something they traditionally have not been able to offer.
100% right. You look at it through a mortgage broker's perspective. They get paid with an upfront commission on the amount of the mortgage or the amount of the loan, and they get a trailing commission. So the longer the customer has a loan, the more commission you earn. But if the customer takes their next mortgage, directly through the bank, the broker introduced the customer to, they don't get that upfront in the future and they lose the trail. So there's a real economic alignment, but there's also just the customer experience to go from a 21 working day on average to get an unconditional approval to be almost instant. It changes the life of the broker. The customers are shaking their head in bewilderment. The last time I got a mortgage, it took forever and I had all these paperwork, and you're kind of telling me it's done. it doesn't feel right. So the feedback, we often hear the words transformational, revolutionary from brokers, and that's one of the benefits of being a startup. You can build without all the legacy constraints. You can build what, in our case, brokers and customers, or businesses and customers in the banking as a service will need.
And we definitely see that among the surveys that we do for mortgage customers, we see that the actual time for approval is a real pain point for some cohorts. So the ability to, meet expectations or just absolutely exceed them from, 21 days to less days than that, even dramatically fewer days than that, I think would be such a great customer experience. And again, one more point towards that customer going, okay, maybe I'll stay with this provider, maybe I'll maintain this relationship with the broker rather than, shopping around or really looking outside of, where they already are.
And correct, Erin, I touched before on the savings account example where you get a half reasonable rate for a few months and then a lousy rate. We also have a similar situation in mortgage world, and I'm sure your studies will have picked that up, as have the ACCC and RBA and the like. And I've now described it, and I think others have it, as a loyalty tax. If you are a loyal variable rate customer that's had a mortgage with your bank for more than a couple of years, if you went back to borrow the same amount to buy your same house and the circumstances hadn't changed, you're probably getting 0.5% lower rate as a new customer. But I heard your bank say that you look after the loyal customers. It doesn't feel like that. So what we will help is, really quick refinancing of mortgages, at a much lower rate. And we've heard time and time again from mortgage brokers where the customer will ask the bank, for a lower rate. They know they're paying more than a new customer, and the bank will say, I'll give you 0.1% off or something like that. So the customer goes off to a broker, gets the refinance approved, and the existing bank retention team will get back on the phone and say, Anna, what are you doing? Well, I'm going to Volt Bank because the interest rate's 0.5% cheaper and you will only give me 0.1 off. Oh, no, we'll match it and we'll pay you some money to stay in the life. Now, that just from a moral perspective is not great. Commercially, it may make sense, but it annoys brokers and it annoys customers. Why didn't you do it in the first place? So what we'll do is work with the brokers, do a very quick approval, and then in many cases, we'll go and pay out the existing lender. So it bypasses their retention team. So bank, you did have your chance to retain the customer and you chose not to. So you don't deserve the business. So things like that will help our partners, mortgage brokers in this case. So you'll see that theme of, whilst we have a direct to customer business, the majority of our business will come via partners.
Yeah, it seems like a great solution for both brokers, but also customers, because you're just reducing the game playing. It's just more straightforward, and that's what customers want. They just want a good rate. They want it to be suitable for their specific situation, and they don't want to be fooling around, going back and forth with different contacts, having someone say, no, we can't match. Oh, now we can match because you've got an offer on paper.
And look, we do need open banking for mortgages. I've been writing mortgages since the early 90s and in senior roles from 2000 in mortgage world. I can't tell what variable interest rate I will get by looking at banks' websites. There's always discount off these rates. So customers don't know. So they don't even get the transparency right. And that's where open banking will help. The second part, though, it's a bit like the saving account example. Inertia is high. Where do I go? The last time I got a mortgage, with an experience that I never want to go through again. So I'll just cop it. And that's where Volt, working with mortgage brokers to say, hey, this process is so simple compared to what you would expect. And really within a week, we could have you refinanced out a week. Well, on average, it'd be taking 2 months to do a refinance at the moment. That is game changing.
Yeah, absolutely. Do you have, thinking about all these opportunities for Volt to really help customers, but also help different organizations, brokers, different industry partners, what goals does Volt have for the coming year, and what would you say you're most looking forward to?
And this year is all about scaling up. So we've built a mortgage product, and we'll do SME and personal loan later, but mortgages, we've got a full range of deposit accounts, and not just for consumers, for small business, for corporates, for institutions, for self-managed super funds, and they'll be distributed directly via our app. through deposit brokers who are growing in popularity. Mortgage brokers are now 2 and 3 mortgages in new mortgages in the country, and deposit brokers are picking up. But most of our customers will come through our banking as a service relationships. So largely what we have built has not been exposed to the market. And we've got 8,000 customers, but we haven't ever opened to the public, and we haven't got any of our partners at full scale. So this year is really about scaling up. And what I'm most looking forward to is for our team, who are as excited as anything, but haven't been able to largely go out and show their family and friends and ex-work colleagues what it is they've been building. We're going to be able to do that this year. So it's an example of 2 things that I'm really looking forward to, and I'm sure I'm going to be very proud, as will the team. One is that even as a small player, we'll be able to show that banking can be done in a better way for all stakeholders, but particularly customers. And that will be an example for other banks. Well, if Volt can do it, why can't you? And we'll be quite vocal about that. But the other part is our wonderful team who are desperate to show the world what it is that they have created. And to be able to see that, I can't wait. I've got a bell that I ring, and it's going to be ringing a fair bit this year.
That sounds great. And I love the idea of, making banking better, raising that bar for existing providers, redefining what customers are expecting, making things easier, making products better suit the needs. I think it's really exciting. And the idea of scaling up, I mean, it's a good year for it. I think everyone's ready for something new, ready for a change, ready for things to be a little bit easier. So I think you're in a really good spot to really help customers and also just, shake up the industry a little bit.
Bring it on. Hang on.
Fantastic. For our listeners who are interested in learning a little bit more about Volt, do you recommend they just have a look at your website?
Absolutely.
Okay.
Yep, absolutely.
Perfect. Well,
you can always track me down too. I don't mind talking, as you know. So feel free to have a chat with anyone.
Great. Well, thanks so much for joining us for this episode. It was really great talking to you and hearing about your experience and the learnings from the financial services experience that you have, and then also just hearing about banking as a service and what Volt is planning. I'm really looking forward to seeing what happens in the next year or year and 2 years, and I'm sure many of our listeners will be keeping a keen eye on what Volt's been doing.
Thanks, Dana. Thanks for your time today.
No worries.